Let's get to the banks. Star performers since the election. Our next guest says action on Dodd-Frank is likely to be a year away. Come on in, Rafferty capital markets guy, banking analyst Dick Bove. Dick, you're the cheerleader for the banking stocks. You're the guy who said they're going up, they're going to go up some more, and they've done very, very well. But you're now saying that action on Dodd-Frank is about a year away. I would have thought that was very bad news for the banks.
Well, it is, given the fact that people think that we're going to get immediate regulatory ease in banking, and also who think that rising interest rates are good for bank stocks, which they're not, as you pointed out actually a couple of weeks ago. But the point is that the reason why nothing will be done on Dodd-Frank in the near term is, you have the tax bills, you have Obamacare, you have, the need to figure out between the House and the Senate, what do they really want to do? The bill in the House, basically would simplify regulation enormously, but it would also slow down economic growth enormously. The bill in the Senate, goes back to, the Garn-St. Germain Act in 1970, right, in which, we're trying to glorify small banks and harm big banks. So they haven't figured out what they want to do. So we still have this. Go ahead.
Well, have you sort of pulled back on your call for bank stocks to keep going higher? I mean, it sounds like you're right. I mean, the idea of reforming and changing Dodd-Frank is surely going to take a long, long time. So have you pulled back on your call for the bank stocks? Actually,
this morning we did. We decided that basically the fundamentals don't merit the current prices, and that basically we're in a situation where the wrong theory is being used to push these stocks higher. As we just said, regulation doesn't look like it's going to change very light in near term. But the other thing is, as you noted a few weeks ago, if interest rates keep going up, you keep reducing the value of the assets of a banking company, and you're lowering its book value. So, all these people who think that rising interest rates are a wonderful thing are not thinking about that. They're also not thinking about the fact that over the last 6 years, interest rates have been the lowest they've ever been in the history of the country, as far as I can see, and bank earnings went up 5 out of the 6 years, and that tells you it's not interest rates. What drives bank stocks and why I'm enthusiastic about them is loans. If you can increase the number of loans being made, their earnings will go up, and you'll increase the number of loans if you cut taxes and you have some fiscal stimulus. But I think, the fourth quarter earnings, when they're revealed over the next 3 weeks, are not going to be exciting, for most regional banks. And I think that people are going to stop and say, well, what do I own and why do I own it? And they're going to figure out they own it for the wrong reasons, and that's very worrying.
Yes, it is. Let's see what happens when we get those earnings from the big banks, because they are still, Dick, they are still going up. As of this morning, all of the major banks are higher. Wait till they hear about your new call. If they're watching this program, they may change their tune on bank stocks. We shall see.